This is the teacher Haris Bhatt, and you are seeing my YouTube channel, Learn Accounting with Sir Haris. Today we are going to solve a question from A2 Accounting. Question from A2 Accounting. And this question is basically, we are going to solve for A2 Accounting, schedule of non-current assets. And this question is very important for May-June 2025, 9706 paper 3. So let's discuss that. This question has come in which year? It has come in October-November 33. October-November 33 is the year in which the question has come. This is one of the very difficult questions. Although all questions of schedule of non-current asset which are coming in the paper are quite difficult now. So we are expecting this question in May-June 2025 paper 3. The statement of financial position of K Public Limited Company at 30th June 2022 showed a total carrying value for property, plant and equipment of 6,20,000. This consisted of premises, machinery, and motor vehicle. So you are going to solve a schedule of non-current asset. You are supposed to prepare a schedule of non-current asset of a total carrying value, which consists of 6,20,000. And just a minute. 6,20,000. This consists of premises, machinery, and motor vehicle. As part of the preparation of the financial statement on 30th June 2023, the company needed to prepare the schedule of non-current assets. So for 22 to 23, we are supposed to prepare a schedule. Following information was available. The premises had been bought on 1st July 2007 for 4,80,000. At that time, the cost was considered to be 50% for land and 50% for building. It means that out of 4,80,000, 2,40,000 is building and 2,40,000 is land. We know that land does not depreciate. We have an idea about that land does not depreciate. So 2,40,000 of the building has been depreciated, right? For the next, already been depreciated for the next 15 years. It is the policy of the company to depreciate building at the rate of 2% per annum using the straight line method. So straight line method we are using. 2% means 2 over 100, means 1 over 50. So we have, you can say that building has 50-year life. On 1st July 2022, the premises was revalued. The valuation was 7,90,000, with 3,90,000 of this being the value of the land. It means that the value of the building is 790,000 minus 390,000, that is 4 lakh, right? It was decided to continue to calculate depreciation on building at the rate of 2% per annum. So we will decide, it has been decided that you will calculate depreciation again on 4 lakh, which is the amount of building at the rate of 2%, which becomes 8,000 actually. So next is machinery. So first of all, let me make you see the question, that what is the requirement of the question. So let me go towards the, the question paper. Let me open the question paper also of 33 W winter. This is the question paper. Okay. Let's see. What is the requirement of this question? First question. Complete the following table by calculating the required values for each category of property, plant, and equipment at 30th June 2022. Use the space provided to show your working. So total net book value is 6,20,000. How, sir? Let me show you. Then the net book value given is going to be 6,20,000. Here it is written. The net book value of all the assets, including premises, machinery, and motor vehicle, is 6,20,000. And now the premises has been bought on 1st July for 4,80,000. What does it mean? It means that we have already used the premises from July till 30th June 2022. He is basically, the question examiner is asking us to prepare these values for 30th June 2022, not for 23. So basically, after this particular working, then you have to prepare the schedule of non-current asset for the next year, which is 21st July 22 till June 23. So we have to go reverse to find these values. These carrying amounts are given. So let's see the cost of the premises. We know the cost of the premises, and that is how much that is given. That is on 1st July 2007, it is 4,80,000. So let me write it down that the cost is, I will write it in the particular format. Let me, okay. So the cost is going to be 4,80,000. So we can add text in this. I can write here, that is 4,80,000, right? Now I'm going to calculate the depreciation. If you just see the question that this asset has been purchased on 1st July. So it means that we have used that asset from 1st July 2007 till 30th June 2022. So let's count the years, that how many years the asset has already been depreciated, already been depreciated by straight line method at the rate of 2% per annum. Okay. So it means that 4,80,000 out of 4,80,000, 2,40,000 is land. So that will not depreciate. Only the remaining part is going to depreciate, which is basically 2,40,000, and it is going to depreciate from 1st July till 30th June 22, right? So let's count the years actually. 1st July 2007. Let me check it again. Right? It is 1st July 2007, if I'm not wrong. This is 1st July. So let's count 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So it becomes 15 years. So it means that this asset, this building of 2,40,000 is already depreciated by 2%, which is going to be 4,800 for how many years? For 15 years. It has already been depreciated for 15 years. So I'm going to calculate 4,800 into 15. So how much it will become? That is 2,40,000 into 2% into 15, that is 72,000. So it means that the building has already been depreciated by 72,000. I can write here easily, that is 72,000. And now I can write the net book value also for the building, which is 4,08,000. So 4,08,000 is the net book value of the land and building both, obviously. But because land does not depreciate, so I will not take into account the land. So the cost is 480 of premises of the previous year, and the depreciation till now is 72,000, and 4,08,000 is the net book value. How we have calculated depreciation? Let me go back and make you understand again. 2,40,000 into 2% is the straight line method. So 4,800 is basically the depreciation, right? For 1 year, and the asset has already been depreciated for 15 years. So already been depreciated for 15 years. So we can easily calculate depreciation. 4,800 multiplied by 15, that is 72,000. So let me write it down here also, just to make you understand. So we are done with that. Now let's move forward. The next part, for which we have to go reverse to find the depreciation, net book value, and the cost for the year ended 30th June 2022. From 22 to 23, we have to prepare schedule of non-current asset, right? So let's move forward. For machinery on 1st July 2022, the company operated 4 machines. These had all been bought for the same price. So all the machines are bought for the same price, and they are purchased on 1st July 2022, right? Machine 1 and 2 are fully depreciated by 30th June 2022. They are fully depreciated. No, operates 4 machines. But when they have purchased, we don't know. But machine 1 and 2 are fully depreciated. Machine 3 had been bought on 1st July 2014, and on 30th June 2022 had a carrying value of 12,000, where machine 4 had been bought on 1st July 2016, and on 30th June had a carrying value of 24,000. So it means that we can easily calculate that the 2 machines are fully depreciated. It means it has no carrying value. And the remaining 2 machines have a carrying value of 12,000 and 24,000. If we total it up, it is 36,000. So the carrying value of these machines are going to be 36,000. So let's calculate that. So this is going to be, so this amount I can write here. This amount is going to be 36,000. This amount is going to be 36,000. Because I need to find the depreciation and the cost of machinery also, but I can calculate this value also easily. I can calculate the value of motor vehicle. How come, sir? 6,20,000, the total carrying value of all the assets, including premises, machinery, motor vehicle. So 6,20,000 minus 4,08,000 minus 36,000, we will get the carrying value of motor vehicle, which is 176,000. I have just shown it before going for the calculation of machinery for understanding purpose, that we can calculate the carrying value of machinery easily by taking the difference of 6,20,000 and 4,08,000 and 36,000. So now let's calculate the total depreciation and the cost of these assets. Let's go back to our question. Now we'll see that the carrying value is 24,000 and the machine 3 had been bought on 1st July 2014, and on 30th June they had a carrying value of 12,000, and during the year ended 30th June 2023, the two fully depreciated machines were sold at a profit of 36,000. So both the machines have been sold at a profit of 36,000. Two new machines were bought at a cost of $90,000 each. So we have purchased two new machines during the year ended 30th June 2023. So it means these machines were not available in 2022. So that's why I didn't write these machines in my calculation over here. I have taken the net book value or carrying amount of the two machines only. Why? Because these two machines of 90,000 were purchased in the year from 22 to 23, right? And the depreciation of the machine is at the rate of 10% using straight line method, and it provides a full year depreciation in the year of acquisition and none in the year of disposal. So we don't calculate depreciation in the year of disposal, and we calculate depreciation, full year depreciation in the year of purchase. It means that 90,000, the two machines are going to be depreciated at 10% for the whole year. That will become obviously 9,000. It is understood, right? But two machines which are fully depreciated, they have been sold. So we have to subtract that cost also from the cost of the assets. And then we can find out for the year 2023. So let's go back now. So machine 3 had been bought on 1st July 2014 and on 30th June 2022 had a carrying amount of 12,000. So let's see that because the depreciation is 10%, my dear students, it means that 10% means, let's calculate it. 10% means that 10% means 10% means 10 over 100. So 10% is going to be, means that we are going to supposed to be, let me show somewhere else so that you won't mind it. Just a minute. I'll go here. Okay. 10% means 10% is equal to 10 over 100. It means beta 1 over 10. So it means the life of all the four machines, because the depreciation rate is straight line and 10%, that is 10 years. So the life of the machine is going to be 10 years. So let's calculate now. Life of the machine is 10 years, all the machines. So now if machine 3 has been bought on 1st July, it means that it has been used from July till 22. How many years? 15, 16, 17, 18, 19, 20, 21, 22. 8 years have passed. 8 years have already passed. So if the life of the machine, if the life of each machine, including machine 1, 2, 3, 4, is going to be 10 years, then machine 3 is already being used for 8 years, right? And now the carrying value is 12,000. So it means that this machine is going to be used for 2 more years. So we can easily find the depreciation, which is going to be straight line method, which is going to be constant for each year. Remaining life is 2 years. So 12,000 divided by 2. Okay, let me show you again. The asset has been used from 1st July till 30th June 22. So 8 years have passed. Now only 2 years have left. 8 years have passed. Only 2 years have left. And the value of the machine is 12,000 divided by 2. So the depreciation for each year, which has to be constant and equal, is 6,000. So the cost is 6,000 depreciation for each year. The asset will depreciate for 10 years. So the cost is going to be 60,000. So it means we have found the cost of all the four machines. Each machine costs us 60,000. Another proof of this, I will show you. I will show another proof of this. What is the proof? Let me calculate. Let me show you. The proof is again, see, about machine 4. It is purchased on 1st July 2016 and on 30th June had a carrying value of 24,000. So it means that it has been depreciated for 17, 18, 19, 20, 21, 22, 6 years. So 4 years have left. So 24,000 divided by 4. Again, the annual depreciation will come 6,000. 6,000 into 10, 60,000. So all 4 machines cost us 60,000. 60,000 into 4. So we will get the 60,000 into 4. We will get the cost of the asset, which is again going to be written here. And they are 2,40,000. How come, sir? I will show you. Each machine cost us 60,000. There are 4 machines. So the cost is going to be 2,40,000. Now, out of these 4 machines, 2 machines have completely been depreciated, fully depreciated. It means that 2 machines cost us 60,000, that is depreciated. Again, 60,000, that is also depreciated. Then plus more depreciation we can calculate. How come, sir? Because we know that the carrying value of the machine 3 is 12,000. So the cost is 60,000 minus 12,000. It means that it is also depreciated for 8 years. 8 into 6, 48,000. So I can calculate this depreciation also. That will be 48,000. And for the 4th machine, it has been used for 6 years currently. So the depreciation is going to be how much? That will be 6 years. And 6 into 6, 36,000. Okay. So now we can go for the total of this. And we can easily calculate the total depreciation. That is going to be 2,04,000. I can write here 204,000. So we are done with the machinery also, right? I will repeat again. 2 assets have already been fully depreciated. 60,000 cost fully depreciated. So whole depreciation has done 60,000 because the book value is nil. Then again 60,000. Third asset is depreciated by 48,000. That is why its carrying value is currently 12,000. And the 4th machinery, 60,000, is being depreciated for 6 years. That's why carrying value is 24,000 and 36,000 is the depreciation. So the total depreciation on all these 4 assets is 2,04,000. That's how we have calculated that. Let's move forward now for motor vehicle. If you talk about motor vehicle, on 1st July, the motor vehicle had a cost of 2,50,000. So that's quite easy. The cost of the motor vehicle is going to be 2,50,000. So we can calculate depreciation directly, easily. This cost is going to be 2,50,000. And carrying value we have calculated already. So the difference is going to be the depreciation. And that is going to be 74. So this is how we are done with this part. I hope so that you understood this part fully. Now let's move forward to the next part. If you don't have if you have problem, you can see the part again. You can see the lecture of this particular question. Again, you can revise the lecture because this is a very difficult question, no doubt. Now let's move forward to the schedule of non-current asset, which we need to purchase for premises, machinery, and for motor vehicle. So let's do that here. No, let me rub it up a little. And then I will go for that. Rub it here so that I can prepare the schedule of non-current asset for premises, then machinery. We can write the total column also and the motor vehicle. And total column we can write prepare also if need be. So we used to write the total column. It is good that we should go for the total column also. It is always good to understand the question because it is a part of the pattern we follow regarding the schedule of non-current asset. So here I'm going to write the cost of the asset, and that is cost at 1st July 2022. And that cost at first, I will write 1,722. Then addition or revaluation point. Then there will be going to be disposal, which needs to be subtracted. And then cost at 30th June 23. Same is the case with depreciation. I will write depreciation at 1722. Then add charge for the year. Sorry, spelling mistake. Charge for the year. Then the disposal depreciation will be subtracted, right? And then we can calculate the, you know, the depreciation of the revaluation, which is going to be subtracted, because the revaluation is basically, we are doing revaluation at the start of the year. So all the depreciation which has already been charged is supposed to be deducted, because revaluation means that the asset is being revalued. So the value of that asset will not be no more with us. Let's start with the premises. So the cost of the premises, which we have calculated, which we have already knew about that, that is going to be 4,80,000. How come, sir? Let me show you. That is 4,80,000. Okay. Cost will remain the same because we didn't purchase any machinery currently. So the cost is going to be at the start. The cost will be, sorry, the cost is going to be 4,80,000 for machinery. Have we gone for any addition? No, but there is a revaluation. Okay. So how we are going to calculate the revaluation? Let me show you. The current depreciation, the depreciation of the building, which is going to be revalued, is 72,000. So how basically revaluation is used to done? Let me show you. The building cost is out of land is 2,40,000, right? And now I think he said that whole premises has been revalued. Let me show. Let me see again. Or only the building. Okay, premises has been revalued. The valuation was 7,90,000. And just a minute. The valuation was 7 with 3,90,000 of this being the value of the land. So the land has also been revalued, right? From 2 lakh, from 2,40,000 to 3,90,000. And building has also been revalued, right? So let's calculate it. What we do, 2,40,000 of building has already been depreciated by 72,000. So I will subtract that amount. And then it will be compared with the revaluation amount of 4 lakh, because the new value of the building is going to be 4 lakh. So I can write here easily that depreciation is going to be cancelled out with 72,000. Then premises is going to be increased by how many value, I don't know. And revaluation reserve is going to be credited. So we can use 480,000 easily. 480,000 would be more appropriate, because we can use both things together, because depreciation is all being cancelled out. We have to charge depreciation from the scratch again, because asset has been revalued. It means that we have gone for wrong depreciation charged, right? So that is going to be 4,80,000 minus 72,000, 4,08,000. And now the value has increased to 7,90,000. So that is going to be the revaluation reserve, the difference of the two. So let's see that what is the amount of revaluation reserve. Okay, 7,90,000 minus 4,08,000. How much you are going to get? That is will be the revaluation reserve. This will be, I believe, 3,82,000, if I'm not wrong, right? So this will become, premises will increase by 3,10,000. So here I will write revaluation of 3,10,000, and that's why it will become now 7,90,000. The total value of the premises will become 7,90,000, right? Because the premises has been increased by 3,10,000, and the whole depreciation, which is there of 72,000. So from where you got this depreciation? Let me show you. The previous year depreciation is 72,000, right? And now this depreciation is supposed to be cancelled out because the asset has been revalued. So the whole depreciation is going to be cancelled. So it will be go into negative 72,000. Sorry. And now we have to charge depreciation for the current year only on building. Only building is going to be depreciated, because you know that land does not depreciate. Whatever the amount is land, that will not depreciate. And the amount of building is 4 lakh as I discussed with you. So the depreciation is going to be 8,000, 2% of that. Sir, how it is 4,000? I can show you easily. Out of 7,90,000, minus 4,08,000, we'll get the revaluation reserve. But out of 7,90,000, 3,90,000 is going to be the land. So it means 4 lakh is the building at the rate of 2%. That is the depreciation current year. Sir, how you know that 3,90,000 is the land? Let me show you. The valuation of 790,000 with 390,000 of this being the value of the land. So the remaining is going to be the building, which is supposed to be depreciated by 2%. So this is how we are done with the calculation of the building. I have written it in the disposal wrongly. It has to become with revaluation actually under, and then we can write the, let me just make it clear. This 72,000 will not come here because there is no disposal. It will come in revaluation. 72,000, sorry. And then we are going to go for the net book value total, and then the net book value for both years. For 31st July 2022, this will be 8,000. So the net book value at 30th June 2023, as I discussed with you, it is going to be 782,000. And the net book value for previous year is going to be 4,08,000. We are already done with that. We have calculated that in the past. This is the net book value at 3623, and here I will write net book value at 3622. This is how we used to do that actually. Right? Now let's move forward towards the machinery. So let's first take the cost of the machinery. What is the cost of the machinery? I will not suppose to see this. I will go with my question because we are done with the part over here. We have calculated that. So the cost of the machinery at the start is 2,40,000. So I will write here 2,40,000, which is the cost of the machinery. 2 new machines have been bought as discussed. I think so. No. Yes. 2 new machines have been bought here. Let me show you. 4 machines are already there, but 2 new machines have been bought for 90,000 during the year, right? So I will write 90,000 here, which is the cost of 2 new machines, 90,000. Then 2 machines have been sold out. So that will come in disposal, and the cost of the, we will credit cost 1,20,000 because asset account, this is asset account. It is purchased with the added, it is debited with the cost of the asset and credited with the cost of the asset sold, right? So I think 2 new machines have been purchased at a cost of 90,000 each, right? Sorry. So it will be 1,90,000 into 2, it will be 1,80,000. I will write here 1,80,000. And 2 machines have been sold already with a price of 60,000 each. This is the price, 60,000 into 2, 1,20,000. So the amount is going to be 3 lakh, which is the cost at 36/2023. Now, provision for depreciation at the start, we have already 2,04,000. I will write here 2,04,000 is going to be the provision for depreciation. Remember this, that disposal depreciation will be subtracted, and these 2 assets are fully depreciated. So I will write full 1,20,000 because fully depreciated means that this has already been depreciated by the full amount of 1,20,000, right? So we are done with that. Now I'm going to calculate depreciation of on the new assets which we have purchased for 1,80,000, and the depreciation is how much? Let me see. I don't know. The motor vehicle depreciation rate, machine depreciation rate is basically 10% using the straight line method. So it means that how we are going to calculate the depreciation. Let me show you. 1,80,000, 2 machines into 10% because it is a that will be 118,000 because we have annual basis, and 2 machines 60,000, and machine 3 and machine 4 that is also being used. So we will calculate depreciation on that also. 60,000 into 10%. 1 machine is still to be depreciated for 2 years and one machine is still to be depreciated for 4 years. So that will again come 60,000 into 10%. Oh, sorry. That is going to be 6,000. So the total is going to be 30,000. So the charge for the year will be 30,000 on this particular. There is no revaluation. I will go with the closing amount, the depreciation at the end, and that is going to be 114,000. Now the net book value 3 lakh minus 114,000, that will be 186,000 for 30th June 2023, and this we already knew, that is going to be 36,000. Net book value at 36/2022. How come, sir? Let me show you. It is already given 36,000, so that's not a big deal. Now let's talk about motor vehicle. The cost at the start is 2,50,000. Just like we are preparing a T account of depreciation, cost at the start is 2,50,000. Now let's see what is the addition of the motor vehicle. We have to study that completely again. So the motor vehicle on 1st July, the motor vehicle had a cost of 2,50,000. We have already written that. That's not a big deal. Then there was no acquisition during the year, but one vehicle with an original cost of 80,000 was sold for 50,000, giving a loss on disposal of 1,200. Okay, it means that one of the asset which original cost 80,000 has been sold. So we have to subtract 80,000, no addition. So we can do that easily. 80,000 we will subtract. Oh, sorry. Okay. So the remaining amount is going to be 1,70,000 is the cost. Same is the, let me see the depreciation at the start. We have already prepared that. The depreciation is 74,000 at the start. I will write here 74,000. Now it is said that the asset has been sold, right? So let's see that how the asset has been sold, but we have to write the depreciation on the asset sold also. Let's do that. And the charge for the year. We'll go for the charge for the year afterwards. First, we'll calculate the depreciation on the asset sold. The asset, there was no, but one vehicle with an original cost of 80,000 was sold for 50,000, giving a loss on disposal of 1,200. Loss means that the asset value is more than 50,000. It is 51,200, right? Let me show you. The asset value was net book value was 51,200. It is sold for 50,000. That's why we are going to have a loss of 1,200. So the net book value is 51,200 and the cost is going to be 80,000 minus 51,200. We will get the total depreciation on the asset sold, which is 28,800. So it's quite simple. We don't need to calculate that. So the depreciation on the asset sold is 28,800 and it has already been depreciated by 28,800. How come? 80,000 minus 51,200 net book value, and the total depreciation we calculated is 28,800. Now the accumulated depreciation on 30th June was known to be 70,160. So we have already calculated the accumulated depreciation over here, that is 70,160. So we have the depreciation of 70,160 at the end, and now we can take the difference, which is going to be reversed by going reverse. 70,160 plus 28,800 minus 74,000. So we will have 24,960. We can take the balancing figure also over here, 24,960 easily, and we can calculate the depreciation also. That's not a big deal. But first, let's just take the balancing figure because time is short. Let me go for the total of the question first. So the net book value is 170,000 minus 70,160. That is going to be 99,840. 99,840. And the net book value at the start, we have already 176,000. So let me write that also. 176,000. I will write here. So this is the end of the question. I will go for the total column also. But first see the depreciation on motor vehicle. If you just see the question, is there any rate given for the depreciation charge for the year, that how the motor vehicle is going to be depreciated? No. So actually, the motor vehicle depreciation charge for there is not given. That is why even in the past, we have calculated the depreciation on motor vehicle as a balancing figure. How come, sir? Let me show you. We have calculated the net book value 176,000 through 620 minus 36 minus 4 lakh 8. Cost was given, and difference I have taken the depreciation. Same is the case over here. I have taken the difference as depreciation. Now let's go for the completion of the total column, and we are done with the question. I hope so that this is going to be a difficult question, but I have tried my level best to make you understand in the best possible manner. So this total is going to be 9,70,000 over here. 9. That is the total of the cost. Addition is going to be 180,000. Then here I will subtract 3 lakh. And then I can say, then I can find the value of revaluation also. That is 3,10,000, the revaluation over here. And that amount is 2 lakh, I believe. That is 2 lakh. And the revaluation is going to be 3,10,000. And then I can write the total of all these, which will going to become, let me calculate, 1,260,000. Then let's go for the total of the depreciation at the start. That will be 3,50,000 over here. Then go for the total of the charge for the year, including the balancing figure of 24,960. That is 62,960. All three, 62,960. Then the total of the disposal depreciation, which needs to be subtracted from here. That is going to be 148,800. And then the revaluation, the revaluation asset, the depreciation is going to be cancelled out. It needs to be subtracted. Total, we will subtract 72,000. The whole depreciation of the past. Then it will come 192,160. So total column is important. It has marks, obviously. It has almost 4 marks if you just calculate that. Total column has 4 marks. Now it is 10. This is 1067,840. And this we can calculate by adding up the column in the row, which is 6,20,000. We have already have it. So this is how we are done with this part of the question. Right? Obviously not that easy, but I've tried my level best to make you understand. One thing which is important, that if impairment is given in the question, I am going to share with you, because I have uploaded the last lecture of the with impairment. Remember that you don't need to subtract impairment from here, and you don't need to subtract impairment depreciation from here. You just write here, I will show you, just write impairment loss. Whatever be the impairment loss, just write here in positive. Let's suppose impairment loss is going to be whatever it is, 30,000. So you will write here 30,000 impairment loss. It will be added in depreciation and subtracted from the cost. That's it. You don't need to do any working for impairment. Yes, I have solved the last question in which I have subtracted the impairment from the cost, and impairment depreciation from here, because the examiner has solved the question in that way. But in May, June 2433, they have changed the approach. They have just added impairment loss, which is very easy to calculate, the value by which carrying amount is more than the recoverable amount, and just write the impairment loss over here, right? So you will write here what depreciation and impairment. So it will become more easy for us, right? Let's go move forward. What is going to be the next requirements, if there is any. Schedule of non-current assets. We are done. K Limited accountant has faced additional challenges in preparing the financial statement for the ended 30th June. Some of the ledger accounts for the non-current assets had been accidentally deleted from the computerized accounting system by a junior member of staff. State one implication of this for each of the directors or the auditors. Obviously, the auditor will give a report. The auditor's report are going to come. So the auditor is going to give a qualified report that there is a material misstatement in the accounting, and the accounting system is not showing a true and fair view of the business, because if a junior member of staff has accidentally deleted the some of the ledger accounts for the non-current asset, so it means that the statements are not going to show a true and fair view of the business. So there is going to be a material